Hello and welcome to another episode of the Investor Financing Podcast. And on today's show, it's another exciting show because we're going to talk about turnkey real estate investing. A lot of you out there might not know what it means, but it's really, really good for people out there that are passive investors. They have capital, but they don't have time. They don't have the knowledge of the certain markets. They don't know where to go. Maybe they're in an expensive West Coast market and everything there is $1 million. But this show is going to kind of break down what turnkey investing is. And you're going to learn from like a pioneer in the industry. Probably he's in over 25 markets. So he has a good in-depth look at the markets. And because it's always like, that's what I was always doing before. It's like, where should I invest? I don't know. Right. So he kind of cuts to the chase and shows you why and where he's investing. And you're going to learn a lot from this episode. So please welcome Marco Santarelli. He's an investor, author, Inc. 1000 entrepreneur, and the founder of Norada Real Estate Investments, the largest nationwide provider of turnkey cash flow investment property. His mission is to help 1 million people create wealth and passive income and put them on the path to financial freedom. He's also the host of the top-rated podcast, Passive Real Estate Investing. Welcome to the show.
Thank you, Beau. It's an honor to be here. I'm very excited to have this conversation with you and your audience today.
All right, great. Let's just dive in and briefly explain what is turnkey real estate investing.
You know, it's funny that term has been kicked around for so many years that there's really no true formal definition in the industry what it is. I started my company 18 years ago, and that's when I started marketing the crap out of the word turnkey. And it means something very specific to me. But unfortunately, there's a lot of companies out there that use that phrase, and what they're selling is I hate to say lipstick on a pig, but you know it's really not truly turnkey. So the definition of a turnkey real estate investment for me is fairly broad, and it means this. I always take a top-down approach when it comes to real estate investing. In fact, the top-down approach is one of my 10 rules of successful real estate investing. And what that means is you start not with the property at the bottom of that funnel, but you start with the market at the very top. And so you choose the right market that has the right fundamentals to be investing in, which means jobs, job growth, population growth, et cetera. And I know I'm getting into the weeds of it a little bit, but essentially start with the market with good fundamentals and then work your way down to the submarkets, the neighborhoods that meet your investment criteria, and then look at the properties that fit inside your buy box. And when you get to the property, so that's the first part. When you get to the property, you want a property that's either new or like new, which means there's no deferred maintenance. It's got to be cash flow positive. There are a few exceptions to that rule, but 99% of the time you want property that is going to be cash flow positive. And you want professional full service property management wrapped around that as one of your team members that manages your assets, because it's not just a property, it's an income producing asset. So market, neighborhood, property, condition, cash flow, and management and the rest of your team make up what I'll define as a turnkey investment. And if you take all that, that's the answer to your question. But if you take all that and you build around that a process, a system that takes you from beginning to end to purchase and invest in those properties, one after another, that's what I refer to as turnkey real estate investing. So the investment is inside the whole experience of investing in turnkey real estate.
That's great. That's a really good explanation. And I think you pointed out something too, is not everyone is looking for cash flow. There's other reasons people buy real estate, such as they're looking for a market that they might get appreciation, or they're just looking for some tax strategies. Maybe they're going to do some cost segregations or so forth, you know, for a tax strategy. So not everybody, I always think everybody wants cash flow, but it's not the case with many high net worth people. Sometimes it's not really the cash flow now, it's the cash flow later, right? And so that's kind of what you do. You help people plan and build a plan to take them from no rental properties to, you know, be buying several properties a year. And then I guess when you have an initial assessment or a conversation with somebody that's interested in buying property, you're kind of looking at what their goals are, right? Because you're kind of like, you the difference is you're doing a roadmap for them versus like, this is how you're going to get to, retirement in 10 years. Is that kind of how you gear your first conversation with somebody that's interested in finding out more and like buying properties?
Yeah, we call it a strategy session, and there's no cost. It's free. All our services are free. We never charge clients a dime ever, beginning, middle, after. But what you're talking about is really the starting point for a lot of people, a lot of investors, anybody listening to this, regardless of whether you're a newbie and you haven't invested in real estate yet, or you're a seasoned real estate investor and you've got a portfolio of 10, 20, 30, 50 properties. It really doesn't matter. You have to have, some people will call them goals, but you have to have a roadmap or an objective. What are you trying to get to? For most people, it's ultimately creating time freedom. Well, how do you get time freedom? You have to have financial freedom, because that will contribute and free up your time. So you have that time freedom. Well, to have the financial freedom, you have to have an investment plan. You have to have this investment strategy, which you turn into an investment plan, and then you execute on that plan. So that's the part that everybody needs to do, regardless of whether they're talking to you or to us or to someone else, any other, consultant or advisor or counselor. But you need to have a roadmap. So if you don't have a roadmap, you don't know where you're going. As the Cheshire Cat said in Alice in Wonderland, if you don't know where you're going, any road will get you there. So you need to have that roadmap, right? And so for some people, they know what it is, but for most people, they don't have a complete picture of how to get where they want to get to. And that's where that free strategy session comes in that we offer. All we're doing is we're just going to be asking you questions to pull that information out of your head and help to crystallize and clarify it. But even if you're not doing that with us, if they're doing it with you or someone else, you just got to ask yourself the questions, where am I today? Where do I want to get to? And to get to that point, what do I need? How many properties or how much income? Let's break it down into more granular components. And 70% of that income could be coming from income producing real estate. 30% of that could be coming from whatever else, promissory notes, stock market, whatever, investments, you're comfortable with. But that's a long answer to your question, but it's all about planning and, having a roadmap.
That's great. Like, we've gone through a huge boom, right? We're still in a boom in most of the markets. I would have thought that appreciation was going to lapse. And even in markets where notoriously we haven't gotten appreciation, like some Midwest markets, they're all appreciating in great numbers. I look at some of my Indiana properties. I'm like, oh my God, they've gone up so much in value. Going forward in 2022, I know you don't have a crystal ball. None of us do that I know of, but where do we go from here? I guess that we know there's still going to be a shortage of housing. Rents are still probably going to increase, and we're still probably going to see appreciation this year. But how has, or if it has or has not, has your philosophy in buying real estate changed, or will it change over the next year? Is it, for the last 18 years, obviously you have a track record of success. So I'm guessing that maybe it's not going to change too much, but I'm just curious on what your thoughts are about this crazy market we're in.
So it's a great question, and it's one I talk about a lot. And it's this: I am bullish, very bullish on real estate, and you should be too. And there's a lot of reasons for that, much of which is fundamental in nature. So, I've always said that it's not a question of, should I buy real estate? The answer to that is always yes. And it's not a question of when should I buy real estate, because the answer to that is always. It's the answer to the question is, it's not about when, but where, because there's always opportunity in this big country that we have, with over 500 metropolitan statistical areas, or MSAs. And you could look at these markets as tier 1 markets, the largest of the markets, tier 2, which are the mid markets, and then the tier 3 markets, which are the smaller cities and towns that are peppered all over the place. There's always opportunity everywhere if you know what to look for. And this goes back to the fundamentals, and this is why I'm bullish. We're in an environment right now where we lack supply pretty much all over the country. We have very strong demand, so there's an imbalance. There's no equilibrium there. And that's really driving the housing market. And that's also the reason why you've seen crazy appreciation rates all over the country. Some markets far more than others, where we're seeing, 20 some, 30 some percent annual rate of growth or price appreciation. Now that's an anomaly. That's not normal, and that won't continue. But that's just what we experienced last year for multiple reasons. But look, real estate should just appreciate on average over a long-term average with the real rate of inflation. That's what it's supposed to do, because a house is nothing more than commodities that have just been packaged together and sitting on a piece of land, piece of dirt. So if you buy in good markets that have strong fundamentals, that provide cash flow and will over time appreciate, then you've got a great investment. Because on top of that, you have the amortization of the loan, which is what your tenant is paying for. They're basically paying off that mortgage, that financing on your property for you. And you have an incredible inflation hedge. And you also have depreciation, which you can take for 27 and a half years. The IRS allows you to do that. They want you to do that. So it's a very powerful investment. So that's why I'm very bullish on real estate. It's not a question of if, and it's not a question of when, it's a question of where. Where should I invest? Because there's deals everywhere all the time. You just have to know where to look and what you're looking for. So I don't know if I've answered your question.
No, you have answered it. So just a question out of curiosity, has your model changed at all with short-term rentals? Do you help people get into short-term rental properties? Is everything you do long-term rental type of deals, or has there been some transition with such a demand for these Airbnb type properties?
That's an interesting question and timely, actually, because I've never really been pro short-term rental. And part of it is because, one, it went against my business model at the time. And number two, I didn't fully understand it, but I knew people who were investing in short-term rentals, and some of them were doing very well, and some of them weren't doing so well. And now I understand why, because I bought and invested in my first short-term rental last July. And so I made myself a guinea pig to an experiment that I was doing in a market where I took a property and I turned it into what some people refer to as an extreme Airbnb. So it's not just a typical property that's been furnished and people just come in and out of it. I basically spent a lot of time and money over building that property, meaning that I themed the entire house, not just the rooms. And so it's a themed home, which makes it kind of one of those properties that you would see on A&E or HGTV, which actually our property might actually be on one of those networks. So I'm okay with short-term rentals. What I've learned is that it is very important to pick the right location that is going to have strong demand and doesn't have an oversupply of other short-term rentals. And you could find this out for yourself by just doing your research and due diligence on VRBO and Airbnb, just to see if a particular location has a lot of supply and what they're renting for on a nightly basis. So do we offer short-term rentals? No, but the reason your question was interesting and timely is it is an option that I'm actually exploring right now to provide that as another option. So rather than traditional long-term rentals, which are 1 and 2 year leases, you would have the option to invest in a property that's well located that allows you to do short-term rentals. So that might be coming here, in the near future.
Yeah, no, that was great feedback. And I was just curious. Yeah, I don't know. I have a lot of clients that come to me for financing, and they're buying in all different areas for short-term rentals. And it's the last year has been even more crazy. And I don't know if their annual gross revenues are sustainable, but it's just like, there's just a mad rush right now. And I get it, because you look at it and your cash flow is so great, but I don't know how sustainable it is. And that's the thing. It's not really, I don't know how tested it is versus, the long-term rental property that you buy that's cash flowing. It's always going to cash flow. And so it's still kind of like when it really comes down to it, it's still location, on whether it's a short-term or a long-term real estate holding. When you're looking at markets, it's changing. It could change from month to month, what markets make the most sense at certain times to buy, where there's the right opportunities. What are like one or two markets that you really like right now, if you don't mind sharing with us?
Yeah, it's a good question. Whenever I get asked that question, my response is it depends on what you're looking for, because we break markets down into two general categories. There are markets that are more cash flow based. So I call those, smooth and steady, or linear markets, often referred to as a boring market. And then on the other side of the spectrum, you've got growth markets, and these are more cyclical in nature. If you look at a price chart, it tends to fluctuate up and down like a roller coaster, or it's a market that has been more or less smooth and steady for a long time, and then kind of started to, grow, not necessarily parabolically, but exponentially. And then you've got, markets that are in transition in between those two, which I refer to as hybrid markets, which, kind of give you the best of both worlds, strong appreciation potential, but also good cash on cash returns at the same time. So that's why I say, if you want a recommendation for a good market, the question is what are you looking for? Is it cash flow or growth? But I can give you an example of either one if, that's the case.
Sure. Yeah, that's great, because sometimes people call me and go, "What's your rates?" And I go, "Well, it depends," because there's a lot of variables, right? And I just did the same thing to you, and it's true. Look, there's a lot of reasons to invest in real estate. Are you looking for the highest cash flow market? Are you looking for an appreciation market? Or are you looking for a hybrid market? So that's good how you clarified that. So yeah, if you want to give me an example of a linear market versus a hybrid versus more of an appreciated market would be kind of a good.
Yeah. So, a market like Indianapolis and Memphis, for the most part, with some exceptions around it, but I'm just being very general here. Those markets are more cash flow based markets. All markets have seen some pretty good price growth over the last year and two. But Indianapolis, Memphis, those markets, Jackson, Mississippi, are markets that are more cash flow based. They have stronger cap rates and cash on cash returns. We have markets in Pennsylvania and Ohio that are kind of a combination of cash flow or hybrid markets. Kansas City, Missouri is more of a hybrid market. It's been experiencing some pretty strong growth. On the other end of the spectrum, if you're looking at growth markets, a lot of that has been coming out of the state of Florida, state of Texas, basically a lot of areas in the South and Southeast. Now, I will say that those are markets that we're in because the numbers make sense from an investment perspective. They're good markets to look at and be in. However, if you look at overpriced markets or expensive markets like coastal California, in fact, most of the cities along the western coast of the U.S. and places in the east, such as New York markets, those are also growth markets, but they don't make sense to invest in from a real estate investor's perspective because the property values are very, very high. The rent to value or rent to price ratios are very low. So it's hard to make those properties cash flow. And if they do, the cash on cash returns are very low. So even though they're growth markets where they're experiencing strong and high appreciation rates, at least for now, that is certainly subject to change. You're not going to get the rates of return that you will in other markets. So as an investor, you're better off taking your capital and buying, multiple properties for the same capital that you would use as a down payment on these expensive markets and buy, 2, 3, 4, 5 properties in these other markets in the Midwest, South, Southeast, because you'll have better cash flows, a larger portfolio, you'll have better diversification, and you'll still have strong growth potential if you're choosing the right markets.
You're listening to the Investor Financing Podcast. We'll be right back after this break.
Hi, this is Beau, host of the Investor Financing Podcast. I appreciate you checking out our channel. On this podcast, we talk about real estate, investing, financing, business lending, and acquiring and expanding your business. I'm sure you will find some videos here that will help you build your business empire. There's a lot to see. Take your time and make sure you comment, like, and subscribe. Thanks again. There's a lot of things I want to dive into, but I want to be courteous of your time. But I'd love to have you back on the show because I think we could do a whole episode on investor mindset of like what an investor should look for like when buying a rental property. I'd love to that could be an hour session right there. But I think that's really important for maybe some investors that don't own any real estate, or maybe they own a few properties. Yeah. But like here's what your cash on cash may look like for a passive investment like this. And that's the other thing you want to consider. Like you can go and try to do this yourself and like find a market and find a property management company, but that's very difficult to do. Out-of-state investing is challenging to build the team there. And so what Marco does is he helps people put it all together, and he's been doing it for 18 years. So really appreciate your time, and hopefully we can get you back on the show because I want to dive in on a lot of things. I just don't want to take up 2 hours doing it, but this was really valuable, and I hope everybody listening got a lot of value. Marco, any departing words?
Yeah, I mean, I could talk for hours about departing words. I think one thing I'll leave your audience with is there's a lot of people who are interested in real estate, like most people, but a lot of people, and then there's a percentage of those people that will actually take the time to listen to your podcast, maybe listen to our podcast, read books, educate themselves, and become knowledgeable on investing and real estate investing. Then there's a far smaller percentage of that group that actually puts the rubber to the road. It takes action, makes things happen. So unless you make crap happen, nothing's going to happen in your life financially or otherwise. So it's great to have the interest, and it's powerful to have the knowledge, the education, but it doesn't manifest itself. It doesn't materialize until you actually take action. And that could be anything as small as just doing research online, like Zillow, looking for properties, making calls, questions, emails to learn more about those properties, or just contacting my team and having a strategy session to just drill down into what the possibilities are, and where you could take this and where you can go. Whatever it is, the fact is you need to build momentum and take action and move the ball forward. Otherwise, you're going to be in the same place you are today, a year from now, 5 years from now, 10 years from now. So, the important thing is to take action. Yeah, no, that's great advice. Even people that are a lot of like not high net worth, like high W-2 earners making 5, 8, 900 grand a year W-2, but they own no real estate. It's like this is like, if you don't have time to do it, this is what you should be doing, because long-term, you're going to get the tax deductions. Maybe you can have your spouse get more involved in the business, so you can potentially qualify for a lot more deductions. But people like my brother's a perfect example. He makes a ton of money W-2, and he's like has no real estate holdings. And I'm like, you gotta own real estate. Everybody should own real estate. It's like the number one vehicle to get wealthy. But really appreciate your time. Let me ask you a question. When was the best time to invest in real estate? Yesterday. Exactly. It's like you could say a year ago, 10 years ago, 20 years ago. It doesn't matter. It's in the past. But so what's the next best time to invest in real estate? Right now. We got to exactly. Yeah. Well, I always stress this on my channel too. I know for me, I'm 44 years old and I don't have enough cash flow coming in to walk away, right? Like, what is your financial independent number, or we call it, some of our groups, we call it being 100%, or we have enough cash flow covering all your expenses and your fund money. I mean, you have to have a plan, because, my biggest fear in life is being 70 and working at Walmart, right? Like, I don't want to be that person. But what steps are you taking? What steps are you taking to create cash flow and create net worth in the future? Exactly. Is the key. And that's why it's like, it's really not that hard. You just have to like talk to the right person or take action in one way, whether you're buying a property that's turnkey and ready to go and you don't have to think about it, or you're going to do it yourself. You have to I love what you said. It's like, look at property. This guy told me one time, he goes, if you want to do more deals, you have to look at more deals. It's very true, right? Like, they could probably get on your distribution list and see deals every day, or, you probably email them out to people that, hey, here we have some opportunities. You should be at minimum looking at these deals every day to get a feel of what
what the prices are, what the rents are, what are property taxes in the area, what are HOAs, if any, like, and start doing demographic research in that area, and then come up with your own model that makes sense for you. So I don't know. That's why we do this show, is to talk to people like yourself that have been doing it for a long time and been doing it successfully. And guys, I'm going to put it, Marco's website below in the show notes, and then his podcast, you can find him as Passive Real Estate Investing. And I was just listening to it before we got on. It's good. I've listened to it in the past many years ago, because I remember you from many years ago. You've been around. So
yeah, I've been doing this for over 18 years.
Well, thank you so much for your time. And I hope to have you back on the show, and we can
anytime
do a deep dive onto market selection, how to analyze a deal, what metrics that you think are relevant, is the cash on cash and all that stuff. So anyways, thanks so much. And we'll see you on the next episode.
Thanks, Beau.